So welcome everybody to day 5 of the masterclass of 5.0 2CT. Today we're going to be going over the 15-minute and 1-minute entries. Now, before we get started, I just want to ask all of you that are here, who's been using the 2-candle theory so far? What time frames and what's your results been like? Positive, negative, it doesn't matter. Let me know. Break even for Robert. Negative 1 hour 5-minute. Justin B. Pretty good. Seasonable trader. Practicing. Got a couple bangers on 1H5-minute. Enjoying it. 15 1 hour 5-minute. Killed it on Tuganda 3 for all today on a sell. 3 wins 15. Nice. Nice. And who's feeling a lot more confident about their trading? Good. That's what it's about. Been using it for a month plus 22 hour last month. Jeez, that's crazy, Mark. Feels good. It really does. It does feel good for sure. Knowing that you have a strategy or an approach to the markets that if you're patient enough, you identify the right times to trade, you're going to get rewarded. Yeah, granted, we're going to have some losses and some break evens, but more often than not, we can never deny the fact that a candle's got to close bullish and a candle's got to close bearish. And I think that kind of feeling right there is just such a confidence booster. And it really helps you to overcome the immediate results that you get, whether they're when you have losing trades or a streak of losing trades, or you have a run of break-even trades or whatever it is. For me, it comforts me all the time. I never sit there in the evening or when I'm out for dinner thinking, I wonder if I'm going to make money tomorrow. I just now have adopted a complete belief system after simplifying everything that I've learned over X amount of time and whittled it down to what it is now, which is the 2-candle theory. And I just say to myself, if a candle can close bearish tomorrow or a candle can close bullish tomorrow, then guess what? I'm going to be making money. So can you still get into the workshop? Absolutely. The cutoff is going to be this Saturday. We start the workshop on Monday. So if you want to get in, feel free to do so. Took 2 trades, both break even 40-50 mark, could honestly work on my stop loss placement. Well, yeah. I mean, look, the thing is, as long as you're working, identifying what you need to work on, then that's all that really matters, to be honest with you. Once you identify these things, all you have to do is avoid them or tweak what you're doing a little bit. And then that's it. You know, you're plain sailing again, heading in the right direction. So let's take a look at the 15-minute, 1-minute concept here. Pretty simple. It is the same kind of theory as what you've been learning up until this point. Not much changes, other than the fact that you get a lot more opportunities in the day, and you hit TP a lot faster than you would if you was using the 4H and 15-minute or the 1-minute and 5-minute. I'll be honest with you, I trade all of them. I trade on the 5-minute, I trade on the 30-minute, I trade on the hour, I trade on the 4-hour, trade on the 1-minute. If I've not just said that, it doesn't matter where I'm trading. All I do is apply the fundamental principles. That is the core of this concept. And to be honest with you guys, it just doesn't matter where you end up. As long as you understand it, then the rest is history, okay? Where are your results better? Everywhere. I'll be honest, bro. My trading is just crazy. And I try and say that as humbly as I can. But it's just crazy. And you know why? Because I'm just constantly executing, figuring out the best times to trade, identifying the volume, identifying the momentum, sticking to the rules and the plan, and just waiting patiently for those setups to develop. And that's it, boy. Pretty simple. So let's take a look at gold today. Okay, so taking a look at the start of the day, let's say 6 o'clock. So we're looking at this area here. Now, what I would notice, what I did actually notice this morning, what I would notice starting this morning is that the market conditions, let's try and get back to this candle. Yeah. What I would notice And I want you to take notice of the 1 minute time frame as well as we talk about this, okay? But what I would have noticed this morning is that the overall sentiment of the market was really strong bearish. I missed some pretty good sells from 5 o'clock, 5:15, 5:30, 5:45, even into 6:15. So when I see this kind of information, in the back of my mind, what I'm looking for the market to do, and make sure you make a note of this, is really important. I'm looking for the market to shift again, okay? Because every move in the market has a push phase and an exhaustion phase, or every market, all market conditions have sellers stepping into the market taking profits, or buyers stepping into the market taking profits. That's the only way I can think about it, right? I'm not thinking of no highs being taken out, liquidity being grabbed, and whatever else. Like, I just can't get my head around it, and I just whatever, right? So I'm just thinking, simple thought process. This morning, when it comes to the charts, strong push phase. I can see that the market's gone bearish. Where is the best move in this movement? Well, definitely here. Definitely here. So if I was awake or was trading, I know that there would have been an opportunity around these areas, looking here on the 1 minute time frame, guys, on the right, to identify the sentiment of the market changing, looking for that lower high, and then just an area in the market where I want to place my sell stop, to place my stop loss above the structure on the 1 minute to take advantage of this movement. Okay, so that's the first movement. Now, I don't want you to focus on patterns. I want you to focus on the processes. We have a very sharp movement to the downside, an area in the market where price is failing to break above. This becomes a brick wall where our soldiers are failing to break. And I'm anticipating the momentum after the previous candle close. Looking here to the left, guys, previous candle red, this area here to form the wick, which is this information here. And then if it is going to continue bearish, which is my belief system, the next candle will close bearish, then I'm anticipating that after this low gets broken in the sequence, there's a high chance it continue down. So that's the best move. So when I'm looking at the charts here, I already know this. So what am I thinking? Missed the best move. We continue to look again at the second best move here, and we have an area in the market where you can see that the candle closed. We don't get as many wick projections here, whatever else. And what you'll probably identify at the time looking at this charts, again, looking left, previous candle closed bearish, strong volume to the downside. You might be saying to yourself, okay, in the back of my mind, I'm anticipating price to at least get back down to these lows. I'm not worried about the structure here. I'm just looking for that one strong push all the way back down to the major low here in this scenario. And then what you're doing is you're saying to yourself, okay, fine. I have a strong push phase again. I'm looking for this kind of lower high indecision candles, bullish candles, depletion in that bullish sentiment, bearish candles stepping in, the volume decrease into the upside, more sell volume stepping into the markets. Look at the candles, right? Just look at the candles. You guys feeling it the way I feel it? Are you feeling it the way I'm feeling it? Can you kind of gauge here where the market's stalling? Only Ernie said yes. Okay. So then look, we have this. Now we're not looking to trade from this point. We're looking to wait for this candle to close, which is this one here. We start to see the candles depleting in that bearish sentiment. We have that strong bullish sentiment to the upside. And in this scenario, this is where it requires patience. If you enter here, I'm not going to lie to you, it's completely fine. But if you are the type of trader that wants to just be a little bit more patient to wait for this top wick to be formed, you're going to wait for the market to pull back. Once the market pulls back, this is the only information you need to look for. You may not enter after the first red candle close. You may not enter after the second red candle close. But what you'll be saying to yourself in your head is, right, well, look, I can see that this momentum is shifting. I'm expecting the next 15-minute candle to turn red. Maybe I can set myself stop below this wick here, which is the current low of the structure. And if price shifts in momentum and continues bearish, then there's a very high chance that that candle that I'm expecting here on the left will close bearish. Okay. Now, if you was in this and you were saying, well, at this stage, I'm only expecting the market to get to this, then what you could be saying to yourself, oh, sorry, wrong one. Here, this black line. Why did I put that black line there? This black line is for the next entry. Oof. No, we'll talk about that in a minute, actually. So this here. So sometimes you'll have this, sometimes you'll have this. This is the candle close. This is the wick that is being formed. And you can see here, because of the volume in the market at the time, there was not enough candles that were forming to give you that opportunity to say, is this a good opportunity? Can I look to set my sell stop? In a situation like this, guys, I'm going to be brutally honest with you. Sometimes you will get into this trade depending on your confidence and your belief system, and sometimes you won't. But if you don't get those kind of wick rejections, lower highs forming, and you get this mediocre pullback, and then obviously you can check across the sentiment of the market, the volume, you'll probably start seeing other candles on pound JPY pushing bullish with strong closes. You then have to say to yourself, do I jump in on the break of this? You get enough time to identify the wick forming, it's turning bearish, and you say to yourself, well, look, if it continues bearish, then I'll take it on the break of this wick, which is the current low at the time, placing my stop loss above this, which I perceive to be the lower high, and then look to take the sell back down to wherever you want, based on the fact that the previous candle closed bearish, which is this one here, anticipating the next candle to go bearish back down to a key level. Okay, so what you're looking for in some scenarios, you're going to have this, which is beautiful structure. And I'm going to be honest with you, you have to pick your spots. Then you're going to have instances like this, which are not going to create the ideal lower high setup or higher low in any scenario. And you have to make a decision whether you feel confident to take that trade. Now, let's move down to where I was just talking about, which is this information here. Anybody think, no, not that one. Anybody think this is a good entry? Let's remove the rest of the lines. And this one. So look where this black line lines up. We have a nice pullback, lower high, bullish candles. We have red, red, red. We can look for the break of this low here. Does anybody think this is a good entry?
I think it's a good entry.
Thank you. From a 1 minute perspective, it does look good for sure. But I'll tell you something. This is not a good entry. Okay. This is not a good entry. From a 1 minute perspective, it looks good because it's played out. But understand something, and this is really important that you start talking to yourself and getting comfortable doing it. This entry here, right? Look where this lines up on that 15-minute chart. At the start of that 15-minute candle forming, which means that you have the opportunity to take advantage from that entry of that range back down to this low. If you enter now at this black line, then look what happens to your entry. Look at the arrows. You lose the majority of the range of this 15-minute candle. Now, remember what I spoke about. We're anticipating a candle to close bearish or bullish after the previous candle has done the same thing. So what that means for you here, and remember what I taught you in the last session, every candle has a range. If we check the range of this candle, let's do that. That will do. And then we compare this range out. No, actually, yeah, that's fine. So this is what we expect the candle to do, close bearish. And we check this against the range of the other candles. We can see that we have a pretty average candle. I know the right wouldn't be there, but we're just using it because I can't bother to go back, right? But we've got a pretty average candle. That means that if you enter late into the push phase, there's a very high chance what will happen. Price may reject, price may retrace its push phase, price may just turn around automatically once you get back to the key level. And look here, as opposed to entering where you have a better range to the downside, you're entering now late to the downside where there's a very high chance price can reject and continue up. The illustration that I'm trying to make here, the point that I'm trying to make here is what? What is more important?
Waiting for a good early entry.
Good, nice, Mark. What else? What is more important?
I think it's taking advantage of the current candle in which we're trying to trade.
That's also very important. What is not more important than the other then? Let's try that. Okay, where does your analysis start? Where do you make the decisions?
When the candle
Time frame analysis.
Very good. 15-minute time frame. That is the only place you need to be before you scale down. The last thing that you're going to do is scale down. So if you come to the 1 minute time frame because of FOMO because you missed this move here and you missed this move here and you see this developing and you feel like, oh my goodness, I've just missed these sells, but I can get in here now. What are you basing your decision off of?
Fear of missing a trade.
What's that?
Fear of missing a trade.
Yeah, but what are you basing your trade off of?
The 1 minute.
Correct. The 1 minute, because you see a beautiful lower high and you think that the market can continue pushing bearish even at the late stage in this. So I want you to understand one thing as you trade this concept on any variation that you trade this. Patterns are not important. They are not important. What is the reason why we go down to a 1 minute time frame?
To identify the 15-minute candle flip.
Somebody just said something about a stop. Carry on.
I think it's to get a better entry. The stop loss.
It is so that we can get a better stop loss. That is it. Using 1 minute structure to hide our stop loss behind structure on the 1 minute time frame. That is it. Does it affect your take profit? Not necessarily. No, it doesn't. Does it affect your risk to reward? No, it doesn't. The only thing that is going to affect your profit and your risk to reward is if you can get a smaller stop loss. And that is the only reason why you're on the 1 minute time frame. You're not on the 1 minute time frame to identify patterns or lower highs or higher lows that look pretty to you because you want to get in a trade. We're using a very simple approach here. And that is if the previous candle closed bearish, the next candle will close bearish. So if I remove this and focus over here, and I wanted to do this, what is the difference if I just focus on the 15-minute time frame? What is the difference? Me entering on the 15-minute time frame versus scaling down to the 1 minute time frame. What is the difference? No difference. Absolutely no difference. So when we look at the information on the 1 minute time frame, we don't care about break and retest, double top, whatever, blah, blah, blah. We're only going down here to do what?
Hide the stop loss.
To identify the stop loss, but how do we identify where we can place the stop loss?
Smaller time frame structure.
Correct. And if we dig a little bit deeper, what do we get?
Wick.
We get information. Okay. And this information is telling us what? That the previous momentum is bearish. The current 15-minute candle is opening. And while that candle is opening, it is struggling to do what? Push higher. Meaning that the weight of the market is still bearish. This information here is the only information you want to watch on the 1 minute time frame, guys. And all you're saying to yourself is this. The previous candle closed bearish. Here is where the wick is being formed. I can see that the volume and the momentum to the upside is non-existent. And I believe that if the market starts to shift below this level, this is where the 15-minute candle starts to turn red. My stop loss will be safe above this level because price couldn't push higher, meaning that the momentum is to the downside. Sorry, the pressure is to the downside. And then if price passes this black line, that's when the 15-minute candle starts to push bearish, meaning the momentum has shifted bearish in line with the previous behavior, which was bearish. And there's a high chance that that candle will do what? Close bearish. And Bob is your freaking uncle. Does this happen every day? 100%. Does this mean that your trade is going to play out perfectly every single time? Not at all. The only thing that's going to be a determining factor whether your trades play out or not is if you hit the trades at the right time. And how do you hit the trades at the right time? Well, you do the other piece of the you work on the other piece of the puzzle, which is the most important factor, not this concept, which is identifying currency strength or weakness, sentiment of the market, your confluences, and if there's volume or momentum. And how do you identify volume and momentum? Why am I saying momentum? Volume and momentum. Well, if at the time that I wanted to sell this, which is at 5:15, I want to see on another pair at around the same time. Oops, that would do. Well, no, it won't do really. Let's, oh Lord. Let's say at 5:15, I want to see on the 15-minute time frame that there was volume in the market. There you go, around the same time. So let's say here, where is my crosshairs? My crosshairs is here. Oh yeah, I can see the crosshairs. I don't know why it's small over here. Let's change that quickly. Crosshairs, 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 crosshairs.
Appearance.
Pardon?
Yeah.
Appearance.
Yeah.
Crosshairs, thank you. Crosshairs is black. Dotted line, that would do. And I can make it thicker. Oh shit, that's too big. But anyway. Okay, so I'm so baffled. Anyway, so this is 5:15. This is around the same time here. So this is the 5:45, 5:45. Okay, so we don't have a perfect match of volume here, but I will be looking maybe at one or two more. Again, you don't really have a correlation, but I just want to see that there's volume in the markets. Okay, so let's say this is the 5:45. And I look over here and I can see that the market is showing signs of volume. I mean, at this stage, I guess, let me just find GJ, man. G's on piece. And I hope this works in my favor. 4. Okay, it doesn't. Anyway, but guys, listen, we shared an example on the previous session, I believe, on the 1 hour and 5 minute session. And what we want to be identifying around the same time is the volume in the market and using the confluences that we can find on other pairs. When you're trading the 15-minute and 1 minute time frame, you do not need the higher time frames to identify where the volume is at. You just need to identify at the time or around the same time that there's volume in the market based on the size of the 15-minute candles. And the reason for that is you will notice, like today, let's say when I think gold flew up, GJ flew down, there is a massive influx of volume across near enough all pairs around the same time. I don't know why, but that is a great indicator to you and to every single one of you when you start seeing the pairs sync up, that there's a very high chance that the markets are going to start moving. And that is how you identify momentum and volume. Sorry about all of that all over the gaff, but do you understand what I mean? And if you don't, you'll just figure it out anyway with experience. Yeah. Okay, fine. Now, so we spoke about not entering here. Let's get back to gold. All right, so this is gold. So we identified the two best entries, which is here and here. We do not want to enter this one here because it's too late. What about this one here?
Hi, Rock. Can I ask a question, please?
Mm-hmm.
On the left chart, the 15-minute candle, here you have put a black line. That is just the beginning of the bearish momentum.
Right.
But that is just a 15-minute duration. How would you determine the consistency in this very short time? I mean, in 15 minutes, how would you judge that the consistency is in your favor in 15 minutes? Because otherwise, previously it was bullish.
If the previous candle closes bearish, then you anticipate the next candle to close bearish. And that is it. Okay. And that is all you have to have in the back of your mind. Remember, when you're trading the 15-minute time frame with the 1 minute time frame, You don't need any higher time frame analysis because you're only looking for a short-term move to take advantage of, let's say, a single candle's movement. So it doesn't matter whether you identify the higher time frame. It doesn't matter if you have the higher time frame as an added confluence, because all you're looking to identify is the volume and the momentum at the time, and then check the sentiment in the market, see if there's volume momentum at the same time. And then if this candle closes strong bearish, you're then anticipating that if the wick forms and it starts turning bearish, that the next candle will be bearish. And because you're trading this off of the 1 minute time frame using the structures with your stop loss placement, all you're in theory looking to do, let's say in this scenario, is take advantage of a single candle's movement like this. Damn, this is crazy. Let's even make it a little bit bigger. So whether you're right or whether you're right or not, it's besides the point, because all you're looking to do is take advantage of that.
Sir, what if we miss this wick? If we miss this wick, then can we just use the other momentum, because you know that this 15-minute candle will be having many higher highs and higher lows and lower highs and lower lows, many swings. So can we catch any other swing?
No, it doesn't. It doesn't have many high highs and higher lows and whatever else. As I mentioned, you're looking for the price to create strong momentum in either or direction. Identify the area in the market where the candles are stalling and not pushing higher, in anticipation that after this candle's turned bearish and this wick has been formed, which is this information here, if you start to break the low, which is the candle turning red, there's a very high chance that the candle will close red, and as long as the wick is not too big, then you will find yourself in some really good risk reward ratio trades. Look, I know it sounds nuts, but you're not trading anything that you've learned in the past. You're actually eradicating everything you know, and you're just believing in the fact that if a candle closes bearish, the next candle will close bearish, or if the candle closes bullish, the next candle will close bullish. And then you line that up with the confluences and this that you can get from the pair that correlates or is a negative correlation with the pair that you're trading. And if it does start to create higher highs and higher lows and starts doing all this craziness like this here, then you stay out of the market. But it is a logical decision that you have to make based on what you are seeing on the charts. Like, this makes sense because price in this instance is failing to break a structure. We have a very strong push phase, and granted, I may not sell this one, but if this closes bearish, I'll be saying, okay, cool, look, now we're stuck in a range. There's a high chance we'll continue bearish, versus an instance like this, where I can see, in an instance like this, I can see the market has had already a strong movement, which I would have wanted to be a part of. And then if I see information like this, I'm going to start saying to myself, well, look, I don't feel like there's going to be volume in the market now. I feel like this might be an area in the market where price is going to start failing to break below. And now I want a little bit more confirmation of price breaking above this structure. And then in an instance like this, if the wick is formed, all I'm anticipating is that if we get, do we ever get it? I don't know. Let's see. Okay, so in an instance like this, let's do this. I don't know if this time frame has done it, but we'll clear the charts. Does that answer your question? But we'll look at this example because I wanted to talk about it.
Thank you. Thank you.
Okay. So in an instance like this, right, this is what I'll be saying to myself because I wanted to discuss this with you guys, right? Everybody understands the scenario here.
Yes, sir.
I know a lot of you carry a lot of technical baggage, but if you want to make a lot of money, you better get rid of that baggage as soon as possible. Do you understand? Like, just get rid of it. Don't use that as an excuse to do dumb shit. Just get rid of it. It's the only way you're going to grow. So we understand this scenario. We know what's good. We know what's not good. I don't know if we got distracted, but I said, would you sell after this candle closes bearish? I don't know if we got an answer. No, we didn't. We got distracted. Would anybody sell after this candle?
I wouldn't sell. It's like too near to that level that you drew.
Yeah, And plus, you've missed some of the best moves already in this movement. So even if it does continue, it's different if you're in this trade, right? And you decide you want to hold it, that's different. But what is not different, I wouldn't say acceptable, but what you don't want to be doing is looking to sell this now after you've missed all of this, even if it goes down. That's just my chain of thought. You guys will do what you're doing, I guess, but that is my chain of thought. Now, if I'm looking at the markets, right, and let's say that I see this candle close bullish after this strong move, could I buy this after this green candle close?
Yes.
Yeah, definitely. If given the evidence on the 1 minute time frame, then I'm all over it, right? So this candle closes, let's see where this is a bullish candle that closes. Let's just do this, it's easier. So it's 6:15. So we're looking for the 6:30 close, right? So the 6:30 close. So this is the 6:30 close. Did I get an opportunity to enter this trade if I was looking to take buys?
I don't think there's an opportunity.
I don't think there's an opportunity there at all. Because remember, I'm looking to buy around the 50%. I think we're in the wrong area. That's 7:15. Yeah, I'm in the wrong area. My bad. Let's move over here. 7:15, right? So here. So that's a 7:15 close. That's a 7:30 close. Oh, Lord have mercy. That's a 7:30 close. Cool. And then we're looking to get an entry within 15 minutes, which is 7:35. Okay, fine. So the previous candle closed bullish. We can remove this one, I think. Yeah, and this one. We're focusing on this candle here, which is that close. Yes. 7:15. Yeah, to 7:30. Yep. And then we're looking for an entry. Okay, cool. And then this black line, let's remove this stupid box. This black line is now the 50%. So this is where that green candle closes. That's the wick, yep, and that's the pullback. The initial move was to the upside, so it had a slight bullish move to the upside, and then it pulled back to around 50% of the previous. Did we get an entry here? We can be honest, we don't care if we lose. Yeah, I think so. I think after this bullish close here, again, this is a trade you have to make a decision on, just like the examples we looked at previously. Sometimes it will sit there for a while and create and whatever else. But we had this nice bullish candle. I think we'd have kind of felt convinced at this stage, some of us, that the market would continue higher, probably be looking to place a stop loss above there with, an entry above there with a buy stop loss here, and then probably looking to target maybe a 1 to 2 in this scenario. We'd have got triggered into the trade, we'd have got a stop loss. Was this a bad trade? No, I don't think so. I think it's a pretty phenomenal trade, to be brutally honest with you. Looking at how the market came back to the 50%. Some of you may have taken this on a single candle, bullish close. Some of you may wait for a bit more information. Some of you may have entered higher. It doesn't matter. But I still think this is a great trade. Now, when stuff like this starts to happen, what should be my chain of thought here? How should I start to, what do I need to be doing with these market conditions now? Because this is a move that I thought was going to shift the market, but it's not. Definitely walk away for sure. What we're going to have to say is this, right? I've missed 100% the best moves of the day. I did believe that after this break at this high here during a very high volume period, that there'll be a chance that this continues higher, but it doesn't. So now what I'm going to do is say to myself, let's just make sure that we isolate everything in here. And now we start to identify what do we say to ourselves? We're not going to trade until we get information that represents that there's more volume in the markets. So would you sell from this resistance?
Maybe.
Okay, now, if you start trading like this, guys, I promise you, you're going to be, because there's going to be so many opportunities for you, I can promise you one thing, you're going to be changing your minds every 15 minutes. It's not worth it. I would say to myself that I've identified that after this break, there should have been enough volume to push this up. If there's not enough volume for this to push this up, and now we're having some sort of indecision with a breakout break back in, or now price reacting to these wick rejection areas, it's probably best not to enter any more trades until we get information that stands out to us. Once we get this information, what does this tell us?
Whole lot of bullish pressure.
Yeah. And now what do? We start piecing the puzzle again together. Price was pushing bearish, failed to break the structural lows. We entered a consolidation or a range. And for the first time in a long time, we've broken above the structure. If you had a gun to your head, what do you anticipate the next candle to be? Bullish or bearish? You taking buys or sells? Well, we will have to say bullish. And that's all we're expecting. We could be wrong again. We just took a buy here. We was wrong. Whoop-de-doo. But I take 1L here. I wait 45 minutes patiently. Once the market speaks to me and tells me that there's volume momentum again, what do? I simply isolate 50% and the high. Go over to my 1 minute time frame. Let's make sure we get these lines in properly. This is another great example. Wow. So happy that all these examples are showing up so that you don't think it's always picture perfect, right? But this candle closes bullish at 8 o'clock. So I'm looking after 8, that's 8 to 8:15. So 8:15. 8:15 close. That is the 50% line. Any information here to the left is irrelevant. Now tell me, how easy was this entry? How
That
easy?
doesn't really look like an easy entry to me.
Exactly. It's not, is it? In actual fact, that's a tough entry. It's hard. And I agree, it's definitely hard. I never said it would be easy. But there is no but to this. And this is why you've got to be patient. And I prefer, I'm so glad that this has happened because we're going to see so many different variations here with these examples. But, you know, if you don't have the criteria that you're looking for, or you don't see the information that you need, or you can gather the information you need to enter the trade, that you just can't enter it, right? That is the tough part. What I probably would do in the instance like this, because you get to, I mean, look, I mean, I can avoid this easily. I can avoid even buying here for sure. On the breakout, maybe you're entering that breakout if price starts to break above. Stop loss, I guess maybe here or here. Again, I don't care if I lose with these examples, but let's say you do that. You're entering after the candle has gone bullish. So that's a good sign. That's a good sign. Something tells me I'm off here with 8:15. That is the close. That is the wick. That is the bullish candle. Then you're probably looking to enter on the break of here with a stop loss below. You don't get triggered in. That definitely triggers you in. No, I won't lie. I think we've done pretty decent here with this entry. Pushes up, bearish, bullish. Did it bullish? So you'll break even. So that would have been a break even trade for sure. You see how I'm studying this so that I can play every scenario out that's possible in the markets. I know it's never ending, but I think that is kind of the entry I would have got here on the break. No, it would have been here. This kind of wouldn't have triggered me in, but I wouldn't have been too concerned that that closed bearish. The current 15-minute candle is bullish. I have my stop loss below the wick. So I'd have held it. That would have been the trigger candle. That would have been the drawdown. That would have pushed high up into this level here. And I either would have gone stop loss half or break even. So that would have been a break even trade on this movement to the downside.
Rock, so this is, sorry, bro, this is the one I took in on the live session.
Oh, yes, it was.
It wasn't break even, it was a 1 hour win.
Oh. Probably got a better stop loss. That's crazy. You see how you took this trade? And then now I'm going over it. So yeah. So yeah, that would be the scenario. Now, what is determined, or what has made this trade the way it is in terms of this stop loss placement?
Large wick formed.
Well done, man. Well done. Another thing you need to pencil down. Make a decision.
Rock,
Yeah.
did this candle push bullish before it pushed bearish?
No.
It pushed bearish first, right?
14 close, bearish first.
Cool.
That's the wick, and then that's the continuation. Yeah, the wick. Look on the 15-minute time frame. Comparable to this wick and this wick is much larger. What would you do in a situation like this? Well, honestly, guys, you know, where you can get 3R, 4R, 5R out of these moves, if you have a bigger wick, then just be grateful to get your 2Rs or your 1Rs and get out of the markets until there's a better entry, a better opportunity. And that is the only thing that determines your decision making, how big the wick is. And that is it. If the wick is small, go for that money, baby. If the wick is big, get your money and get out. Because remember, we are only trying to take advantage of that next candle's movement based off the previous candle's movement. Does this make sense? And just like the examples that we saw over here, these are sexy, man. You know what I mean? Like, this is where we can destroy the market. But then sometimes we're going to have situations like this, and you can't be greedy. You can't say to yourself, I'm a 1-to-3 risk reward ratio trader, so now I want to go for 1-to-3 every single time. It doesn't make sense, because you're only taking advantage of a single candle's movement. What do you anticipate after this to happen? In theory, I wouldn't even have entered this, if I'm honest with you, because this is too big for me. But then, you know, you could have it in the back of your mind, price going to come back to the highs, which is fine. But after this candle, what do you expect the next candle to be?
Retracing candle.
Yeah, at least a small retracement. Do you understand? Now, I'm not saying that's going to be enough to take out your TP, but then look again. After we have a strong movement down, at some point, price is going to have to do what? Slow down and then retrace. Again, I'm thinking here, at some point, price is going to have to slow down and retrace. So the best entries are always going to be here versus now trying to take a 2-candle theory trade after this candle closes. It's suicide. Would you take a buy after this one? No. Exactly.
No.
If you was in this trade already and you wanted to hold it for longer, is that okay?
Yes, sir.
Yeah, because you have your stop loss in a safe place at the best point in this move. You have the best entry in this move, so you get to take advantage of the full range. So if you want to go for a high target, that is completely fine, and that is the joy of being able to use the 1-minute time frame to get your entries. But it's also, remember, your focus is not just the structures that form or the patterns or whatever else that you get caught up with. It is whether you enter this candle at a good area in the market to make sure you can take advantage of that single candle's movement, and then whatever happens then, whatever happens thereafter happens. Does this make sense? What even happens? Some madness. All right, actually, does that make sense, traders? Okay.
Yeah.
Another scenario here. After this candle closes bearish, would you sell?
Yes.
Of course you can. Again, we have the same scenario, a very strong push phase. We've identified that price is creating a resistance or a high. If this candle closes bearish, then you're looking for that 50% retracement continuation. Now, if this doesn't work out, what happens? Well, you lose a trade. It is what it is. Let's study this. This is at 45. So that's a 45 close. Yes, 45 close. So baffled sometimes. This is 45. This is the close. I'm looking for the 45 open. So that is the 45 open. Yes, it is. Then I'm looking for the 50% retracement. 45 close. 50% retracement. Did we get an entry on this at the 50% mark?
No.
So what does that mean? No trade. Okay. Let me ask you something. If this candle closes bullish, are you buying?
Yes.
No, you're not. Remember this scenario here. If we start to identify, okay, it's not the same scenario, but it's a similar understanding. If you start to, if you see a bias, let's say sells, and you go for it and it doesn't work out, then guess what? It doesn't work out. If you go for sells and it doesn't develop, then it doesn't develop. Here with sells, it doesn't develop. Now we have a candle of similar formation back into this high here. There is what? A confusion in buyers or sellers in the market. Yeah, we don't have anything concrete that we can work with. So with that information, what are we looking for? We're looking for price to break out. This is like really like, I keep saying logical. I'm not sure the word is logical. I'm sure it's logical, but we're just trying to use a really basic thought process when looking at the markets. And we've got 15 minutes to make the decision every single time. Does this look like a sell? Well, I would sell it. Weren't given the opportunity. Now it's bullish. Am I changing my bias? No. Now I'm starting to see this as a resistance. If we break out, then why not? But we didn't. So then I'm saying to myself, okay, cool. Let's see what happens at this stage. If we break out, I look for sells. If we continue bearish, I look for, buys. And if it goes bearish, I look for sells. So this candle closes bearish. Would you look for a sell on this? So now we form this. Now we have
No.
bearish close. Would you look for a sell on this?
I would look at the range.
Yeah.
You're looking for it to break the range. Okay. Anybody else?
I'm not gonna lie. I would probably try and sell it back down to the low of the.
Yeah, so would I. And I tell you the difference in scenarios here. This is a resistance after a strong push phase. So I anticipate what? The bearish move. Here, this is a strong push phase. Can we buy after this candle closes bullish? Of course we can. We said we'll try and buy after this. We can buy after this again because the support is formed. Strong push phase, support is formed, and now expect price to go up. Strong push phase, we tried to sell here, we didn't get a sell. We can still see prices failing to break above. We get a nice bearish candle close. I would set it up and say to myself, well, look, I still think we're going down. So I'll mark the 50% and this area here. I will identify that candle close, which is at 45. Actually, we just do this, right? It's simple now. Yeah. Is it? 45, 30 to 45, 30 to 45. Don't worry, guys. I'll figure this out one day. 45.
I think if you put it on the current candle, the one in which you're going to sell, then that would actually do it.
Okay. So thank you. So there you go. So that's the close. 43, 44. What happened when this candle closed? The market pushed straight down. What would you do in a scenario like this if the market pushed straight down? So it didn't even create a top wick at this point. It just pushed straight down. Would you do this? Would you look for a break of this low to look for a sell?
For me, I would always wait for the week. If it's not farmed, then I'll just leave it.
Okay. Anybody else?
Sometimes in fast moving markets, I'll take the breakout straight away.
Very good. Sometimes you just are not going to have a choice. Well, no, you have a choice, but sometimes you're not going to get the wick that forms, right? So what decisions do you have to make before you trade as part of your plan? That I will always wait for the wick, or I'm happy to take breakouts if there is no wick that forms because the momentum is so strong. You got to define that as part of your plan. Okay. Now we have a situation here in this scenario where we have a immediate bearish push to the downside, and then we have this forming. So once this forms, what could we be looking for here? We get that nice, really nice formation of price creating indecisions, bullish candles, wick rejections, bearish candles, probably saying maybe after this close, or even on the, well, now I probably will go on the break of this low here, to be honest with you. I'll look for a sell stop with my stop loss above this level here to take the trade. It's questionable whether we was triggered into this or not. May have given it some room, I don't know, but let's just say we was, and we lost this trade. Pretty sad to say it, but you know, no point trying to act like everything wins. Say we lose that trade. Another great example here, this candle is still open and it comes back now to the 50% level in the market of that previous candle. So after pushing bearish, it's now retraced its own wick, it's come back in and it's created this here. Would you sell it at this point? If I wasn't bitter, it's true. If you wasn't bitter, for real. Look, again, you know, you can if you want. There is nothing wrong with this. Remember, you're just maintaining that belief, and that belief is that the next candle will continue bearish. That is your only belief system. But there's one thing you got to define again and make a note of this. I will only take trades on the initial push. If price retraces that push, then I'm not going to jump in because I believe there's going to be a depletion in that push. So I'll step out of the markets and wait for another opportunity. I can't tell you what to do, but you have to define that based on how you feel as a trader. Does this make sense? That was a
Hey,
great...
Rob,
Yes.
would I be getting too technical if I say that I would like check how long that current candle in which I'm trying to sell is open?
Yeah, you would.
Right.
I think the only way you can judge that, and how I judge it, is has the candle already pushed the range of what I expect it to push if I was in the trade? And if it has, then you have to make a decision whether you enter again, even if it pulls back to the 50% to create that beautiful retest, double top, lower high, whatever it is, to then make a decision to enter the trade. Like, you have to make that decision yourselves. Is everybody understanding this? Can you also see the different variations that you're going to get on the 1 minute time frame? And why it's so important just to focus on the 15-minute time frame before scaling down. The patterns mean nothing. I'm actually going to turn into the mentor that shits on patterns now, because I really have a strong belief in the fact that a candle has to close bearish and a candle has to close bullish, that patterns absolutely are irrelevant to the equation. Why you, like, it's made me think over the last couple of months, why I've even bothered to focus on patterns like there's some formula in the market, when all I could have, well, I didn't. I mean, you learn this for experience, I guess, but I could have discovered a big old 11 years ago, if I just stared at the charts long enough, that a candle's got to close bullish and a candle's got to close bearish. So if I believe it's going bearish and creates a top wick and starts turning bearish, then why can't I just do this? Go to the 1 minute time frame, it looks absolutely ridiculous. No, actually, that kind of looks really good, to be honest with you. That looks really good in terms of this formation here. But does everybody understand this? Like this candle has to close bearish, or one of them does. Anybody feeling this the way I'm feeling this? Does this make sense to you?
Yeah.
Yeah. So I don't want you guys to sweat over patterns, this, lower highs, this, double tops, this. Just focus on the process over here. Gather your information over here. Identify, add a confluence, which is a previous candle close bearish, anticipate the next candle to go bearish, and be done. Trade during high volume periods where you identify volume and momentum based on how the candles are closing at the same time. Use a little bit of logic and common sense, identifying that price is failing to break above. If we get a red candle, we can sell. Wait for the information. It's true, Ian. Wait for the information. If you get it, take it. Wait for the next opportunity. If you get it, take it. Some trades will win, some trades will lose. But if you're using good risk reward ratio with your trading strategy, you're not doing any dumb shit, then ultimately it's going to work out in your favor. Okay. Then you've got to discover whether you're going break even at 1-to-1, break even at 1-to-2, whether you're taking partials off at 1-to-2, whether you're going for 1-to-3 all the time. You have to figure out what scenarios you're going for 1-to-1s, what scenarios you're going for bigger risk to rewards, whether to set a TP or just to let the TP run, whether to target major lows or major highs, whether to target them on the 15-minute, 1 hour or 4 hour, identifying whether the market's going to continue pushing in the direction that it's pushing based on strength and weakness, etc., etc. These are things that you've been taught, that you know, and you'll only get better at doing if you start executing and really taking notice of what it is you're doing on the charts. What I provided you over the Masterclass 5.0 is just a tool or a roadmap. But it is a tool, isn't it? I guess a tool. And now you just got to learn to use it. You wouldn't have taken that candle though, right? Because the previous was bullish. No, I wouldn't have. I wouldn't have taken that. No. I would have been at the time, if I'm brutally honest with you. And remember, I'm not trading every single bloody candle here, guys. I'm waiting for my opportunity to trade. But I probably would have seen, no, not you, bro. I'm just saying to everybody, I probably would have seen that price is failing to break again. And if this candle closed more bullish, I might be inclined to buy it back up. But I'm not a big fan of these kind of wicks here, so I may have not entered it. No, I wouldn't have entered it. But look, do you want the truth again as well? Final truth here. If I had saw this happened and I missed this, there's a very, very high chance that I wouldn't have taken a trade. I would have walked away for the day unless I found something on GJ. Because I hate seeing this, man. Because I just know how easy it is to trade this and be in this. Especially in the scenario where price is failing to break above. Then we have a really strong bearish candle here. Then I'm anticipating the wick to form. Oh, Lord, I just want to be in the markets. Do you know what I mean? Okay. Do we have any questions on this? No? Okay. So I think we played out about three or four different examples here, a few different thought processes. And what else do I need to tell you about this? Nothing. That is it for now. Does anybody have any questions? Does everybody understand the concept and how to use a 15-minute and 1 minute together? And do you understand what could happen? Like in terms of different scenarios, some will look fantastic, some will lose, some will break even, and some will be great, but not look as clean. You all have to accept this. If you do, I promise you guys, you'll be laughing. Just don't focus on your immediate results or the trade that you just taken. Always focus on the next load that you take over the next week, 2 weeks, or month or so. All right. I'm really looking forward to seeing your lot results. I know what's going to happen. You know, there's going to be a lot of excited traders here that are going to go straight into the markets right now, and they are going to start try this out. It's 4 o'clock. I wouldn't be in the markets at all. And when you do come into the markets tomorrow for high volume periods, you do have to be prepared to sit there and be super patient until it makes sense to you. Once it makes sense to you, then you can pull the trigger, because it's much easier to lose a trade that you're comfortable taking versus taking a trade, losing a trade and you wasn't comfortable taking it. And that is what is going to stop you from doing dumb shit. Okay. So I hope this was helpful. Masterclass 5.0. I'm sure if you go through all 5 videos and you take notes, you'll find some nuggets in each one of them that you can pull together to then start writing out your plan, figuring out where you belong in terms of your variations, what timeframes you're going to be trading. And then now it's all about the next 90 days where you really focus, put your head down, be patient, work on applying what you've learned up until this point. And then after that, you know, making a decision to go hard. I'll make sure, obviously, if you're part of the community, that we'll continue to rehash, go over the information that you've learned today, so that we can continue to, you know, make it second nature sort of thing. And yeah, if you have questions, make sure you ask. But I'm sure if you go through the videos, you'll get enough answers, or the answers that you need. Mohammed, what's up?
Hi, Rock. If the 4 hours is still bullish, and if I find a 15-minute close, can I still sell it, or I have to wait till the 4 hour turn in a bearish?
Okay. With the 2 candle theory concept, you need 2 time frames of your choice only. Meaning, if you trade the 1 minute, you only need the 15-minute. If you trade the 5 minute, you only need the 1 hour. And if you trade the 15-minute, you only need the 4 hour. If you add the 4 hour, you have now 3 different perspectives. That is going to make it super hard for you to trade the 15-minute time frame.
Okay, thank you very much.
Okay.
Okay.
All right, guys. Thank you, man. And I wish you all the best. Wish you good luck. And I'm looking forward to seeing your results. Okay, guys, take care for now. And I'll get this rendered and uploaded shortly. Bye-bye for now.